We're now going to be looking at low interest loans. And when I talk about low interest loans here, I basically refer to two types of situations. A loan where no interest is charged, and a loan where some interest is charged. I was going to say less than the market rate. Now, so basically an interest-free loan and a low interest loan. The most important one is an interest-free loan. The loans where low interest are charged is not important to your syllabus at all. I'll talk about it very, very briefly just to give you a little bit of understanding, but not that important. Now, what we've studied so far and what you see most often are situations, and I'm talking now specifically about Section 7. When you looked at Section 7, these are situations where the donor, where there's a person that made a donation to a trust or made a donation to a person. Doesn't have to be to a trust. But if it is to a trust, Section 25 will apply. Section 7 applies. We can override Section 25, as we know, and Section 7 applies to situations where there's a donation. There doesn't have to be a trust. There's no need for a trust. Okay. So, but let's just for now assume the situation of a trust. So we've seen a situation where a person, Mr. X, gives an asset to a trust, and then there's some sort of income or benefit that goes to a beneficiary. Again, you don't even have to have the trust. Mr. X can just give it to the beneficiary as well, like that. But there was a donation of an asset. That is what we saw. Now, if the Section 7 then applies, then instead of taxing the beneficiary, Mr. X, the donor, will be taxed. Just as a quick reminder, basically, of what happens there. What we're going to be looking at now is a situation where instead of donating the asset, Mr. X does the following. He sells an asset and market value to, well, whatever this might be, the trust, let's say, or to the beneficiary directly. It sells an asset at market value to a trust, but does not charge interest. So, for example, Mr. X sells a block of flats at its market value of 10 million to, let's just call it a trust, but does not charge interest. A market-related interest rate is 10%. Now, I'm specifically using a trust here now because you'll remember that there's a section 7 capital C, which happens when there's a deemed donation if a person makes gives a low interest loan to a trust, which you need to revise. But I'm just going to quickly tell you then what happens. Can you remember what happens here? There's a deemed donation. So Mr. X sells a block of flats to a trust, and let's assume the trust, his children are beneficiaries, just to make it clear for us, and the market rate interest rate is 10%. Basically, what happens here, here is there's a deemed donation, right? And I'm just going to write it quickly here. The official rate of interest is, let's say, 8%. Okay, just for the sake of it. Remember, guys, there's a difference between the market interest and the official rate of interest. The official rate of interest is the repo rate plus 1%. But So what I want you to see is that the deemed donation for section 7C is calculated on the official rate of interest. So you say times 8% times 365 over 365. So that gives us 800,000. That 800,000 rands is a deemed donation on the last day of the tax year. I just assumed here it's for the entire year. Last day of tax year. And you calculate the nation's tax on it. For Section 7 of the Act, Section 7 of the Act, which is the Section 7.3, for example, where there's a donation to a minor, you use the market-related interest to calculate this, so it works a little bit different. I'm actually also just trying to point out to you the differences here. Right. And that gives us 100,000. Let me actually just write it up here. Sorry, not 100,000, a million. Million. Okay. So what I want you to understand, there is a deemed donation for Section 7C. Please revise Section 7C in all of its detail. It's calculated on the official rate of interest, and you'll apply the donations tax rate to it. There'll be actual donations tax payable by Mr. X at the end of the tax year is deemed to take place. So by the it needs to be paid by the time it's due the donations tax, which is usually the end of the next month. All of that is normal. What I want you to understand now is that for the purposes of Section 7, Mr. X is also treated as if he made a donation of R1,000,000 of interest. Now, and not, so I'm going to tell you again, so Mr. X sold a flat at a market value of 10 million rands. He sold it for 10 million rands. So the trust owes him 10 million rands, but he didn't charge any interest. The market-related interest is 10%. So if you think about it, I want you to start thinking about this. Mr. X, what did he actually donate? He didn't donate 10 million rands because he sold it to them for 10 million, so they owe him 10 million rands. But what did he donate? This interest here. Because if this was a transaction in the market, he would have charged interest. So he basically gave away R1,000,000 of interest. Now, why is that important? Because it's important for you to understand the two different scenarios that we can see. So what I've got here, both situations, is I've got a person, Mr. or let's just say Mrs. X, who in this case donates an asset or sells an asset on a loan. So these are the two situations I'm just trying for you to see. Now what we've studied and what you've seen most so far are this situation over here, where we say Mrs. X donates a block of flats, let's say, with a market value of 10 million to the trust. Rental income is 250,000 rands. Goes to a minor child. All right. So, guys, this is obviously just a bit of shorthand just for the explanation. So, Mrs. X donates a block of flats with a market value of 10 million rands to the trust. It earns rental income of 250,000 rands for the year, and it goes to a minor child. I'm going to say of Mrs. X, just make sure, of Mrs. X. So, what will happen here? In this case, Section 7.3 will apply, and Mrs. X will be taxed on how much? 250,000 rands. Right, and the 250,000 rands is the rental income that went to her minor child because she made a donation. That is what we all understand so far, right? Now we're going to have this situation here. So Mrs. X sells a block of flats to the trust for a market value of 10 million rands. Sorry, not for. Let's just say at its market value of 10 million rands. Does not charge interest. I'm just going to say here, market interest is 10%. Rental income is 250,000 and goes to her minor child. Okay, so what's the difference between these two situations? In this situation, she donated the entire block of flats. So she didn't sell it. She gave away the entire asset. In the second one, this situation, she sold it. So she didn't give it away. She sold it at its market value. She just did not charge interest. Now, Section 7C will be applicable. I'm just going to say here, I'm not discussing it here. But basically what would happen is it would be, again, the market value times the interest percentage, the official interest percentage, times the amount of days in the year. I'm assuming it's for the whole year. And that times 20% is the nation's tax. Right, that whole story. What I want to talk about is now the Section 7 implications here. Okay, so think about it now. In this first situation, Mrs. X donates the whole block of flats. It's a market value of 10 million rands. It earns rental income of 250,000 rands. That 250,000 rands goes to her minor child, but she is taxed on the 250,000 rands because it's a minor child and Section 7.3 applies. In this next situation, it's now going to look a little bit different. She sells the block of flats for 10 million. She does not charge interest. The interest that she should have charged is 10%. So, I'm just going to write here, Mrs. X. Interest forgone, that's just a word we can use, forgone, or you can also say not charged. The interest that was not charged is 10 million times, she should have charged 10%, she charged 0%, times 365 over 365. So that is 1 million rands. Right, now, sorry guys, I just want to quickly modify something here. It's going to look a little bit ridiculous. But this rental income of 250,000, okay, let's make it 2.5 million. So Mrs. X will be taxed on 2.5 million, same year with the 2.5 million. Okay, so let me then just re-explain it like this. So here is Mrs. X. All right, and she gives that block of flats sells block of flats 10 million, no interest charged. Right, and here is her little boy. Right, now, this is the idea here. I'm giving him glasses because that's the only way that you know someone is a genius, is if they have glasses, because this kid is a genius. Let's say he takes that money, this block of flats, and he manages to generate rental income. So in the trust, he manages to generate it. So maybe he's involved there, that's saying, even if it's not, right? But the rental income is 2.5 million rands. So what I want you to understand, what I'm saying, the 2.5 million, is I'm trying to use it specifically for an example. What we saw under this first part is, if the rental, whatever the rental amount is, Mrs. X gets taxed on it in full when the block of flats is donated by her. Now when she sells it to him, we want to take that 2.5 million rands rental income and we want to say Section 7.3 applies and Mrs. X should be taxed on this 2.5 million rands. But think about it for a second. She didn't donate the entire asset. In situation 1, she donates the entire asset. So she donates the ability for that asset to generate income. Think about it for a second what I'm saying here. When she owned this block of flats, she could rent it out. She could do whatever she wants. She could try and find a seller and have a capital gain, or she could rent it out. And if this block of flats made 100,000 rands, it was hers. If it made 1,000,000 rands, it was hers. If it made 10 million rands rental income, it was hers. If it made 1,000,000,000 rands rental income, it was hers, if she owned it. So she gave away the ability for that asset to earn income. She gave away the ability for herself to earn income from that asset, sorry. So when she gets taxed, because she gave away everything, she must be taxed on everything that's generated. But in this situation, she did not give away everything. She sold it at its market value. The only thing that she gave away is the ability to earn this 1,000,000 rands of interest. So, that 2.5 million rands rental income generated by the flat, there was a court case, the Woulidge court case, that said, it is unfair. We cannot say to her that she must be taxed on 2.5 million rands because she did not give away the ability to earn 2.5 million rands because she didn't give away the asset, she sold it. She only gave away the ability to earn 1,000,000 rands. So she should be taxed only on 1,000,000 rands. That's the maximum that she could be taxed on. And that 1.5 million rands. So this 1,000,000 rands here is subject to Section 7. Specifically, Section 7.3 will apply to her. But this 1,000,000 rands is not considered a donation. So that means that Section 25B, if it's a trust, will apply and the kid will be taxed on it. If it wasn't a trust, obviously, then he'll just be taxed directly on it. But the trust is the one we see most often. So Section 25, he'll be trust. So understand here the big difference. In situation 1 here, she gives away the ability for herself to earn income from that asset for nothing. She gives away the entire asset. She gives away everything. So she is taxed on everything. In situation 2, she only gives away the ability to earn that interest. So she only gives away the interest. So that is the max that she can be taxed on. The rest of it is not considered a donation, and the beneficiary should be taxed on it, or the trust if it's applicable, however it is. Right, so this is basically what we discussed most of it over here, guys. I just want to quickly talk here. They say if the income that accrues to the donor is less than the interest not charged, it will be included in the amount of the following year. Alright, so let me explain to you quickly here. So let's say Mr. X sells flats, market value of 10 million rands, does not charge interest. So this is the same situation basically. Rental income is 800,000. Market interest equals 10%. Okay. And again, guys, just for the sake of explanation, we assume that was for the entire year. So year 1, the interest forgone. So this interest forgone is the I'm going to call it sometimes, you'll see them call it the Woulidge limit, or this is the max that Mr. X can be taxed on, is 10 million times 10% times 365 over 365, so 1,000,000. So the rental income is 800,000 rand. So, and again, guys, this now goes to a minor child. Same story, right? Goes to a minor child, the rental income. In terms of Section 7.3, Mr. X should be taxed on that 800,000 rands. Why? Because he can be taxed on a maximum of 1,000,000, and this is only 800,000. So he can be taxed on that 800,000. But what I want you to understand is that means that in year 1, he could have had R1,000,000 where he should have taxed on. That's the interest that he didn't charge. But he only got taxed on 800,000 of that so far. So there's 200,000 rands left. In year 2, the interest forgone will be from the prior year, that's 200,000 rands, plus then the current years, which is again this calculation here, R1,000,000, is 1.2 million rands. So let's say again that the interest or the rental income was still 800,000. Section 7.3 would apply. He would be taxed on that 800,000. So there would be 400,000 rands carried forward to next year. So in year 3, the interest forgone from the prior year carried forward is 400,000, and then for the current year it's R1,000,000 again. So there's 1.4 million. So what I'm trying to illustrate to you here is that you or the donor, Mr. X, can be taxed on all of the interest that he should have charged. So if he could have earned R1,000,000 interest and he only gets taxed on 800,000 in the current year, 200,000 gets carried forward. So we calculate in total over the period what is the interest he could have been charged. So that might mean that all of a sudden, let's say in year 4, the rental income, he starts renting out this block of flats. He maybe did some renovations, the trust did some renovations, and the rental income is now all of a sudden 1.5 million rands instead of just 800,000 rands. So in year 4, we have again the interest. Well, we would have had that 800,000 in the previous year, 600,000. So I'm just trying to illustrate to you. So in year 4, the interest forgone would be the interest from the prior year, which we haven't used yet, 600,000. And then from the current year, again R1,000,000. That gives us 1.6 million. And I'm sure I said the rental income was 1.5. No, let's make it 1.8. So in year 4, the rental income is 1.8. But the Woulidge limit is 1.6. So in terms of section 7.3, how much can this donor be taxed on? On the maximum of 1.6. So always remember, the max that they can be taxed on is the interest that they have not charged. But that will continue to roll forward. So if you didn't use everything in year 1, it rolls forward whatever is left into year 2. As you can see there. So it keeps on accumulating. So it's the total interest that you should have charged up to that point, so up to year 2, minus everything that has already been claimed. So that's what it just explains there, not too common to see. And then guys, over here, this is a low interest loan. All of the examples I've shown you so far are interest-free loans. These are now low interest loans. Now guys, this is not important for your syllabus at all. I've included it here. It used to be important and included in the syllabus. I've just included here for an explanation quickly. Don't want you to spend too much time on it. Right. So basically what happened here is Mr. X sells flats at their market value of 10 million rands. Same story, guys, I'm trying to use here. Charges 2% interest. Market interest is 10%. Okay, and then a rental income is, let's say, 600,000. Okay, so in all of the examples I've used so far, we had the person selling the flat, and then they charged 0% interest. But now I'm saying they charge 2% interest. Okay, so they charge some interest, but not everything. They should have charged 10, only charged 2. Now, the same concept applies here. The court case, the Woulidge limit. That's what the court case said. Again, guys, I'm just using it in case you see it, but this is the limit. The maximum that Mr. X can be taxed on under Section 7 is the interest forgone. Again, the interest not charged, which is 10 million times, he should have charged 10%, but he only charged 2%. Can you see this calculates the 8% interest that was not charged? And again, let's just assume it's for the entire year, 365 over 365. That gives us 800,000 rands. That's the max that he can be taxed on. Right, that's the first thing, the max. Then, that rental income considered donation, not considered donation. Okay, so now I want you to understand, this is now, and this is why it's a bit more complicated and not why it's not really in your syllabus. So I don't want you to worry about this too much if you're not getting this, because you should not, you shouldn't see it. Okay. He charged 2% interest instead of 10%. So, in other words, he did not charge 8% out of 10%. So 8% is 8 out of 10 is considered a donation. So, that rental income of 600,000 times 8 over 10 and the portion not considered a donation is the portion that he actually charged. Okay, so that's 600,000. This 480,000 here is subject to section 7. Let's assume again it went to a minor child. So Mr. X can be taxed, should be taxed on that 480,000. You compare it to the limit over here, 800,000, and you can see that he's only being taxed on this 480,000 was generated. He could be taxed on a max of 800,000, so he'll be taxed on this in full. So again, you'll carry forward to the next year, the 320,000, and the 320,000 will be added to next year's limit, as I explained there. Not as important. This 120,000 here will be taxed in the minor's hands, or the beneficiary's hands. I just assumed now it's a minor in this case. So this is not considered a donation. So then I don't want you guys to spend too much time on this last bit at all. Just look at what I did here. That should be sufficient.